Good afternoon and welcome to our webinar for today on PPP forgiveness, what to do now to make things easier later. I am Mark Schnoll. Most of you know me. For those who don't, there's some bio information on the screen. I am the owner of Sexton Schnoll CPAs. I've run our firm for over 15 years. Earlier in my career, worked for CPA firms in Madison, Wisconsin, as well as New York City. Been in Gainesville for about 25 years, and been an accountant, been a CPA all that time. My contact information is at the bottom there, and I'll share it at the end of the presentation as well. Today's agenda, first, a little bit of housekeeping. My planned presentation is about 20 minutes. If you have questions, and I hope you do, please enter them into the chat box. As I'm running the slideshow, I'm unable to see the questions. We will get to them at the end, and we'll take as long as we need to answer all your questions. This program is being recorded, and we will get a link on our website just as soon as we can after it's over. So if you miss something, if you want to see it later, feel free. The items we're going to go through today, first we'll talk about some general rules for PPP forgiveness. We'll talk about the uses of the money that can be forgiven. Talk about some of the pitfalls. How can loan forgiveness be reduced? If you don't fit all the qualifications, you can't get it all forgiven. We'll talk about documentation, and then some final comments, and then the Q&A. General rules on this, on forgiveness. Most of this presentation is based on the forgiveness application and related instructions issued by the Small Business Administration May 15th, about 10 days ago. It was not the first piece of guidance that I expect we'll get. It probably won't be the last, but it is the most extensive. It cleared up some things, it changed some things, and we'll talk about that. Just a reminder, I think most folks know this, but the maximum forgiveness on a PPP actually equals the full loan amount. So if you borrow $100,000, and we'll use that $100,000 loan as our benchmark throughout this program, you can actually get $100,000 forgiven if you meet all the qualifications. The forgiveness is based on spending during your 8-week covered period. I put that in quotes because that's an important term in the forgiveness language. That 8 weeks begins with the day of funding. So if you got your money on April 20th, that's when the money hit your bank. That is when your 8 weeks begins. Something in the guidance that was new and helpful is that they're also giving us an alternate payroll covered period, allowing for administrative ease. The basic idea here is that if you have a bi-weekly pay period, or more frequently than that, maybe you pay every week, rather than having your 8-week covered period begin on the day of funding, it can actually begin on the day of your next pay period. So again, let's say you got your money on April 20th and your normal pay period doesn't begin until April 26th. April 26th can be the start of your alternate payroll covered period. That's only on payroll related costs, not on other costs, and we'll get into that. Another rule we need to be aware of is the 75-25 rule. At least 75% of all PPP forgiveness must be for payroll and related costs. Again, let's talk about that example where we had a $100,000 loan, If during your 8-week covered period you only spend $60,000 on payroll, the maximum forgiveness you're going to have is going to be $80,000. 60 is 75% of 80,000. So even if you spent a ton of money on rent and other costs, your maximum forgiveness in that scenario is going to be 80,000. We also need to be aware that forgiveness can be reduced if you reduce your payroll. If you have fewer people on staff or you are paying individuals less, then you may have a reduction in the maximum forgiveness amount. What loan uses can be forgiven? Broadly speaking, there are two categories: payroll and related costs. And we need to note there that owners are treated differently than non-owners. We'll get into that. And occupancy costs. Those are your two, broadly speaking, those are the two categories of spending that can be forgiven. Let's talk about payroll for non-owners. We start with gross payroll, and that's really all types of pay: wages, salary, bonuses, tips, sick pay. All of these are, it's just gross wages. There's a limitation. The maximum for each employee is, you see that number, $15,385. That is a pro rata share of $100,000 salary. That's 8 weeks worth of a $100,000 salary. That is your maximum forgiveness for an individual. In addition to the gross pay, and in addition to the $15,385, if you're maxing out, retirement contributions and health benefits, including insurance premiums that the employer pays on the employee's behalf. Those costs are also forgivable in addition to the cash salary being paid. For owners, the forgiveness is a lot more restrictive. Here, no benefits are allowed. It's just gross pay. And we've got two limitations. We've got the $15,385. We also have a limitation based on last year's salary. So if the owner took, let's say, a $52,000 salary a year ago, that's $1,000 a week. In that case, they would be limited to $8,000 of forgiveness on the PPP. So you've got to pay the $8,000, and then $8,000 can be forgiven, but no more. Let's talk about occupancy costs. The occupancy costs that are forgivable include mortgage interest if you have a loan on space you own, rent, utilities, and you can see basically all manner of utilities are forgivable, as well as lease payments on business equipment. So if your computer servers, if your photocopiers, if you have those under a lease, those lease payments are also forgivable. And a reminder, these costs, everything in this bucket, may be no more than 25% of the total forgiven amount. How can loan forgiveness be reduced? The quick answer is it's complicated. There are two different ways that maximum forgiveness may be reduced. One is based on overall employee count, and the second is based on a reduction in pay for individuals. Let's talk about the reduction of employees for a moment. And let's take a simple example. Let's assume that right now, and for the 8-week period, you have 4 full-time equivalents. And let's further assume that in the past, and there are multiple measurement periods here. I say it's complicated, but let's say in the past you had 5 full-time equivalents. In that case, you simply divide 4 by 5, you get 80%, and forgiveness would therefore be limited to 80% of your maximum forgivable costs. So again, in this one, if we assume you borrowed $100,000 and this situation applies to you, in this case, you would have a maximum forgiveness of only $80,000. Now, this seems fairly straightforward, but I want to caution you, there are multiple ways to calculate FTEs, and when we get into part-timers and how they calculate into the full-time equivalent calculation, it's that's why you can see this this gets complicated quickly. In addition to what we just discussed, there's another way that your forgiveness might be reduced, and that's if individual employees suffer a reduction of income. So so we look at, for each employee with a salary of under $100,000, we compare their average earnings in the first quarter, January to March of this year, to the average earnings in the 8-week period. If the earnings go down by 25% or more, the max, or actually by more than 25%, the maximum forgiveness is reduced. There are a number of safe harbors here. There are ways to avoid reductions if you think these issues apply to you. For example, with the reduction of employee count, if you restore your full-time equivalents, if you basically hire people back by June 30th, there's a way to avoid the reduction on that situation. There are many other safe harbors. Really, we just don't have time to get into them all. Bottom line, if you think this applies to you, come talk to me, talk to your CPA if you're working with somebody else. Next, let's talk about documentation. I view this as very similar to defending a tax audit. And in that, basically, you need to be able to prove two things. One, that the expenses were incurred, and two, that the expenses were paid. So how do we do that? First, let's talk about payroll costs and documenting them. To document payroll costs, to document that they are incurred, you basically need payroll reports, either from your payroll provider, if you're working with ADP or somebody like that, you get it from them. If you're doing it yourself or working with us, the reports are going to come out of QuickBooks. Basically, we want to document the payroll. We also want to document any other related costs, like the health insurance premiums. That's going to come through invoices. Similarly, retirement contributions. We're going to have reports that document what the contributions were. And then for proof of the payment, we're going to have bank records. Literally statements that show the money came out of your account, documenting that you paid these expenses. You can see at the bottom there, I list specific lender requirements. Understand that the forgiveness decision is actually going to be made by your bank. Obviously, they need to follow the SBA's guidelines, but the decisions themselves are actually at the bank level. And the banks may have their own requirements for documentation. So we want to understand what those requirements are so that we can honor them and get everything forgiven that we should. On occupancy costs, it's a similar situation. If you are paying rent, we'll need a copy of the lease agreement. We'll have you've got utility bills from GRU or whoever else you're dealing with, mortgage statements, and then again, proof of payment again is going to come out of your bank records, your bank statements. I want to mention here, obligations that are going to be forgiven related to occupancy costs need to be enforced as of February 15th, 2020. So what that means is that if you just moved and you are in a new lease that started in April, you're sort of out of luck as it relates to the rent. It's only continuing obligations. Some final thoughts, and I'll take a moment. First, follow your lender's guidelines. I mentioned a moment ago that the forgiveness decision is actually actually on the lender. They may have certain paperwork that they want you to fill out. That's okay, but we need to understand that. So I recommend that you reach out to your lender and see what they're going to require. Also, be aware that rules have changed multiple times and we can expect more changes. Hopefully, any changes that happen from here on will be employee business friendly or borrower friendly. Um, that's our hope. We don't know that that will actually happen. A couple possible changes currently under discussion. One, an adjustment to the 75-25 rule in order to make forgiveness less reliant on payroll. There is a growing understanding that if businesses have been closed, it's difficult to document the payroll costs if they haven't had people on staff. Similarly, they're talking about potentially lengthening the covered period beyond the current 8 weeks. Again, if the business has been closed, it's kind of tough to perhaps spend all the money if they don't have payroll because they don't have because the business has not been operating. My advice: be prepared to be flexible. Recognize that these rules have changed, probably will change again. I feel confident that if you can document based on the existing rules, that you should be in good shape. That things will likely get better, not worse. Um, and to just sort of pay attention to the rules. Consult with us if you've got questions, and you should be fine. And with that, I will open it up for questions. Again, I enter your questions into the chat box, and I will look at this. So one question has come in already. What if you have two pay periods? Some employees are biweekly, the rest are bi-monthly. Can you use the alternative pay period option? I would say that's I would say that's a good question that we need to that we'll need to discuss offline, because that doesn't quite fit into the box that that the SBA has given us. See a couple other questions in the Q&A section. How would a sole proprietor document payroll? That's a whole nother discussion, and I would encourage you to reach out to me offline. If I receive my PPP loan on May 4th, does that mean I can wait until June 1st to start my 8 weeks? Probably not. Generally, the 8-week period is going to start on May 4th. If you have a biweekly or more frequent than that pay period, you could have the alternative covered payroll period only for payroll costs. But surely that the next pay period will start sometime in the next 2 weeks after May 4th. Do waste removal services like a dumpster service count as utilities? The answer is yes. Waste removal certainly counts as a utility, can be, and would count. Let's see. If you are an owner employee and started your business this year, does the $15,385 limit apply since there was no 2019 payroll? The answer, I believe, to that question is yes. That's going to be your maximum in any circumstance. Can you share known owner limitations again, related to 2019. I'm not sure I understand that question. If you can clarify it, I'd appreciate it. Can Cox Cable and Verizon Wireless be considered utilities? Telephone counts, internet counts. So if we talk about Cox, if they're providing cable television, that wouldn't count. But the internet portion and the phone portion would. If my payroll starts the day after PPP loan was given, is it okay to count this payment towards forgiveness, even though the hours that we were paying people was for before the PPP loan was given? The answer to that question is yes. The way and that's actually an important distinction. There had been concern. The law says that 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 expenses must be incurred and paid in the 8-week period. The way the instructions are interpreting that, it's basically incurred or paid. So the answer is yes. Health insurance costs for the owners is not considered. That's a question and that's a statement. They are not. It does not count. That was a change. That was candidly not a change I expected when the guidance came out, but it is very clear that owner health insurance is not part of forgiveness here. Do I have to maintain a specific amount for the 8 weeks, or do you just need to be at a specific amount at the end of the 8 weeks? Well, there are two questions there. You're talking about numbers of employees, and that's my interpretation, that we're looking at numbers of employees. And understand that the full-time equivalent calculation is going to be an average. So they're going to look at what was your FTE in, so if you have 4 2-week pay periods, let's say, in the 8 weeks, each pay period we're going to do a calculation of FTEs, and then your average for the 4 periods is going to be your overall average during that for the loan period. That's going to be compared to what you had in the past. So if you're in a situation where you are increasing your hiring, you might be eligible for one of those safe harbors, but it's not just a matter of getting up to a number at a date. It's your average during the 8 weeks. Let's see. Small business with 2 employees, payroll normal through February, no paychecks in March and April. Then we get funded in May and we start payroll in May. That sounds good. In fact, that fact pattern is really what Congress intended. They realized that people had no money, but the hope was that if we could get them some, if the businesses could receive some money through these loans, that they would then rehire their employees. So that's exactly what they were hoping for. Any recommendations on more likely forgiveness if all goes to payroll instead of 75-25? If you spend 100% of the loan proceeds on payroll, that's fine. There's no problem with that. As the owner, can I make myself an employee in order to pay out the required amount after an employee leaves? Again, owner payroll is going to be limited based on last year's payroll to that owner. So what you're describing likely does not work. What if payroll last year varied during the year? That's a question. What we look at is the total payroll for each employee in a given year, and the average is what is relevant here. So So if you paid yourself a lot at the end of the year, it just gets averaged over the 12-month period. Do hours for FTE calculations go from the day the PPP loan was given or from the date that the qualifying payroll started and was paid out from? It's the latter. Essentially, the full-time equivalents in the pay periods that are being covered by the loan. Now there's a timing question. If my 8-week period ends June 30th and I run payroll on June 28th, but funds don't leave my account until July 3rd, does that mean those funds wouldn't be forgiven? Would I have to run payroll earlier than normal to make sure those funds leave my account? The question here is, if the entire pay period is within your 8-week calculation period, and then you pay your payroll on a date several days later, as long as it's the normal payroll date, you're okay. I would argue that cell phones are part of phones. So so there's a question about, are cell phones utilities? And I believe yes. Our bonus, is it okay to give employees a nice bonus? The answer is yes, as long as you don't, as long as the total that you're looking for forgiveness on an employee doesn't exceed that $15,385, you're good. There's a question here about payroll taxes. It is definitely true that employer Social Security does not count. Employer Medicare may count, and there's some uncertainty there. So for these calculations, let's assume payroll taxes do not count. One exception to that is unemployment tax related to, or not federal, but state unemployment tax does count. Let's see. There are a couple of questions here about forgiveness for sole proprietors, and I'll ask for those folks to reach out to me after the presentation. Let's see. If you're an owner and also an employee in an S Corp, can health insurance and retirement benefits be forgiven? The answer is no. Health insurance and retirement benefits are not, for owners, are not forgivable costs. Will owner distributions count towards the 75% payroll rule? Great question. Owner distributions do not count, period. It must be payroll. Let's see. Let's see. Any other question? I've sort of gotten to the bottom of the questions in both. What about interest for mortgage payments? In a home office setting, that's another question that is going to be best handled offline. If we use 100% of the loan and it is 100% forgiven, how does that work with taxes next year? A wonderful question. And the answer is, I know I can answer it now, but it might change. The CARES Act, which put the PPP loan program into place, specifically says that loan forgiveness is not taxable. Normally, I mean, this is essentially a grant. This is income to you. Normally, this sort of thing, loan forgiveness would be taxable. However, in this case, it's not. However, a couple of weeks ago, the IRS put out a notice that expenses paid with PPP money that is later forgiven is not, those expenses are not deductible. So there's some logic to that, because you as the business owner didn't really pay those expenses. They were paid by, in this case, the government who's funding this loan. So at the moment, that's how it works. Now there has been some rumblings in Congress from members of Congress saying, hey, that is not what we intended. So there may be further legislation on this that would make those expenses deductible. That would sort of be it would be a windfall. It's kind of double dipping, because on the one hand you have the free money coming in, on the other hand you get to deduct what you spent it on. So currently, the forgiveness is not taxable. The related expenses are not deductible, but that may change. How do we reach out to you after the presentation? Wonderful question. My email I'm putting into the chat right now. I can also be reached at, that's the office number, although like so many of us, I've been working from home, so the email is the best way to reach out. If the small business is a C Corp, can the owner's health insurance premiums then be included? That's a good question that, frankly, I don't know the answer to as I'm speaking. I could make arguments in either direction. The one argument is from the perspective of the instructions, which specifically say if you're an owner, it doesn't count. On the other hand, we know that in a lot of cases, ownership is sort of ignored when we get into federal tax. So I don't have a great answer for that. Again, I'd ask that you reach out after the fact, and we can try to get you that answer. Let's see. Any other? I think I've gotten to the bottom of the questions at. Let's see. Is a bonus okay if we haven't given a bonus in years? Yes, it is. If the PPP loan was deposited on a Tuesday, would it end on a Monday or a Tuesday? It would end on a Monday. The day of funding is day one of 56 days. So, and day one of your 8 weeks. So the 8th week would end on the 8th Monday. All right, if there are no more questions, going once, going twice. I have enjoyed this this presentation. I hope you have. Again, we'll try to get this up on our website in the next day or so. And if you have questions, please reach out. Thanks, and have a good day.